Hello traders, welcome back to the channel. The idea of these videos is to show you free indicators that you can find on TradingView. Here we are not going to sell you any course, paid indicators, or anything like that. We will only ask for your support of the channel. We will be showing different free indicators and how to configure them properly to trade Bitcoin or any other cryptocurrency. We will use the signals that the indicators show to help us when trading, and thus achieve the highest possible profit. The indicators that I want to show you today is from the user burger crisis, and we will look for it as Uber strength oscillator. We will use this indicator in a 1 hour time frame to operate quietly, and in this way we will avoid looking at the charts all the time. Also, as we always mention, it is essential that you do your own back testing in the time frame you use or feel comfortable with. This indicator is a combination of several RSI of different length. As you can see, it also indicates possible divergences. Divergence patterns are fundamental when trading because they would show a possible change in trend. We will only use these divergence signals in this indicator to make a trade. But before, we need to configure it as follows. Not all the signals provided by the indicator are 100% accurate, so we are going to complement it with another indicator that we have already seen on the channel. And that is the Cipher V2 indicator, which you can find on my GitHub. Here below I leave the link. To consider long entries, we will wait for the divergence signal, and then we will wait within the first 2 following candles for any of the 3 possible buy signals from the Cipher indicator. Here we are not going to consider the stochastic signals. In the same way, for the case of a short entry, we first wait for the signal from the indicator, and then within the next 2 candles for the sell signal from the Cipher. Remember that if the Cipher signal extends more than 2 candles after the Uber oscillator indicator signal, do not consider the trade. Now let's see some examples. I always recommend putting a stop loss of 1.5%, or above or below the previous high or low, and in this way to avoid possible tricks that the market makes and take them out of the trade. Also, when the trade reaches 1% or profit, I recommend taking partial profits, putting the stop loss at the entry price and letting the trade run. This indicator can be used in conjunction with some of the indicators posted in previous videos in order to get more reliable and accurate inputs. Thanks for watching this video. Subscribe to see when we release a new video. See you in the next video.